Hi everyone, welcome back to the episode 2 of Advanced Engulfing Concept. By the way, very thankful for the support that you have shown in the previous video. On this video, we're gonna be discussing about types of engulfing patterns, what's the logic behind them. Okay, so let's get started. Okay, before that, I forgot to discuss about engulfing field and dominant or hidden base. So engulfing field is simply means that when an engulfing buy or a sell zone gets failed or gets broken is what we call it as engulfing field. So in this example over here we have an engulfing buy zone. So usually what we anticipate is that when market will come back to the zone, we will have a bullish move to the upside. But if market fails to do that and breaks it with the body closer, this is what we call it as engulfing field. As simple as that. When we talk about dominant or hidden base, a two same color candlestick having a base is what we call as dominant base. Okay, let me repeat this again. So when you have a two same color candlesticks breaking the previous low with the body closer is we call it as a bearish dominant base. Or when we have a two series of bullish candlestick which broke the previous candlestick high with the body closer is what we call as bullish dominant base. If you just look at the OHLC perspective, we have open, high, low, close, open, high, low, and a close. So what are we forming? We are forming a drop and a base and a drop, right? So this base over here is what we call as dominant area. So this buy to sell movement is what is our dominant area. Same goes for here. We have a open, low, high, close, open, low, high, close. So this this sell to buy movement is what we call as our dominant area, or you can say it is a rally and a base and a rally. Okay, so the dominant areas or your hidden base will occur only in the continuation phase, not in your reversal phase. So what I mean by that is you won't see a dominant area in a rally base and a drop or a drop base and a rally. It will happen on the continuation phase. Now two important things over here. Two different types of dominant area which are usually much stronger than your usual ones. So let me show you a few examples of dominant area first. If I just go back to the gold chart on the daily maybe. So on the daily we can see there is a very good momentum to the upside. So over here I can clearly see this is a dominant area buy. This is a dominant area buy, dominant area buy, dominant area buy, dominant area buy, and this is another dominant area buy. Okay, can we consider this as a dominant area? No. Why? Because price has only wicked above the previous high of candle. It is not a series of two continuous bullish candlesticks. So we need a body closer above the previous high in order to consider this as a bullish dominant area buy. Okay, and coming back to the topic, which dominant areas are usually much stronger than your usual random markings of dominant areas. Let's understand that. Okay, over here if you look in this example, we had the engulfing buy that held price and pushed price higher, right? So when we are coming back to the zone, we usually expect market to go higher, right? But what happens is price broke it. And now if I look at the OHLC perspective, what I can see is over here, this is how your OHLC will look like. So this base over here was responsible for this engulfing buy fail, right? This base led to the breakout of this major support area, correct? So, or you could even call this as your flip zone. Not exactly a flip zone, but the context is same, that this buy to sell movement, or this drop on a base and a drop, was the reason that led to the breakout of this zone, correct? So what we anticipate is that this zone becomes a bit stronger than your usual dominant areas, and when price comes back to it, there can be a good reaction to the downside. But is it necessary? Does market will follow it every time? No. There can be possibility that price may go higher into your engulfing the origin of this movement, sell movement, and then push lower. This could be the scenario. So all we can do is make a bias that this could be a point of interest, or the point of interest could be the higher one. All the market is supreme, and we have to understand by looking into the current market price and your entries part. I'm not gonna go into that for now, but this sort of dominant area tend to be much stronger than your usual markings, okay? And there is type 2, which is basically the same thing, but let's understand that one also. So over here we call it as double dom, or you can maybe something else in your terms. So what happened over here is price was in a, okay, so price made this dominant sell over here, and this dominant buy was responsible for the break of this previous your dominant sell. So can be considered as a flip zone, or in to be perfect you will call it as your double dom. So this base was broken by this base over here. So when price will come back to the zone, usually you will see a good reaction coming into the market. You have to follow your storyline and direction, everything, but to make you understand, this type 2 is what is much stronger than marking out your random dominant areas, okay? Let's look at few examples on the live market. Maybe let's see that. Okay, on the H4, on the gold chart, okay, yeah, I can see a good example over here. So what happened was, the bullish momentum is quite strong, but what happened on the gold recently is that there is this engulfing field that is giving me some signals that on the H4 we are getting bearish, right? So during the pullback phase, I can see this is the dominant area buy that is holding the price. So this is the low that is holding the price higher. Price reacted it, fails to break it, reacted again, fails to break it, and eventually it broke it. Okay, this is not really the perfect example. Why? Because this low price failed to close below this low, so this is not a perfect dominant area. But if you look into this zone over here, I'm pretty sure there is gonna be something over here. Okay, yeah, there is a EG cell that was responsible for this, this bearish movement. Okay, the traders who know about decision levels, let's try to compare it with this engulfing concept or the dominant concept. Let's see how they are very, very similar to each other. So the decision level traders may know this is a open close level or buy, right? And once it was broken, that tells the bias is to the bearish side. So who was responsible for this break? This level over here was responsible for the break. So this is the level from where they will anticipate for a sell movement, correct? So you can see the both concept is quite similar to each other. It's just the understanding, So coming back to the topic, so this dominant area was broken by this dominant, not really a dominant area because we failed to break below this low, but let's take a example. Let's visualize that it was broken with this body closer. So this would have been a perfect example of why this area is important area to look for the sells. Okay, yeah. So yeah, the type 1 is this one over here, and the type 2 is this example over here. Now let's get back to the main topic, which is type of engulfing patterns. So we have 5 types of engulfing pattern. One is the very classic engulfing pattern. Then you have your blend engulfing pattern. Then you have perfect or Quasimodo engulfing pattern. Then you have your gap engulfing pattern or seam color engulfing pattern. Okay, the classic one is very simple. You guys know that by now, which is for a bullish engulfing pattern, all we need is the high of this bearish candle to be engulfed with the bullish body closer. Just that, right? For the bearish, all we need is this bullish candle low to be engulfed with the body closer of a bearish candlestick. As simple as that. And then we mark this as the engulfing buy zone and this as the engulfing sell zone. Now coming to the second example, which is blend engulfing pattern. So in this example over here, when price takes more than one bullish candle to close above the previous bearish candlestick high. So in the example, if you look at the high of this bearish candle was engulfed by 3 consecutive bullish candlestick. So whenever you see this pattern happening, it is a blend engulfing pattern. So and another key thing to look at is the OHLC view over here is that we are forming up dominant areas while breaking out of this high, right? This resistance area. So this was the dominant area that led to the breakout. So when price will come back to the zone, we generally anticipate that this is the area from where price will react and go back bullish again, okay, or give a bullish movement. But is it necessary? No, it can't. It can go deeper into the zone and then does this. So it's just the anticipate or the bias that we make that this area is stronger, right? And usually it tends to react from here only, but there can be cases where it may go deeper into the zone and then react. Okay, coming into the bearish type of blend engulfing, when this low of bullish candlestick gets taken out with more than one bearish candlestick is what we call it as blend engulfing. Okay, so over here this low was engulfed by 3 consecutive bearish candlesticks. So this is what we call it as blend engulfing sell. Okay, same thing over here. This this was the base that was responsible for the break. So we can anticipate from here we could get the potential sell movement after the pullback. Now okay, let's look at few examples on the live chart. Let's go into the daily chart of gold. Okay, over here there is a beautiful example over here. This is an engulfing buy and 2 bullish candlesticks were responsible for the break, right? So when there is a more than one candlestick that engulfs the high of bearish candlestick high, then we consider this as the blend engulfing example, right? And this base was responsible for the breakout, and we can see clearly that when price came back into the zone, we do had a very beautiful reaction from here, but eventually it came deeper into the zone and then reacted. So again, it is not necessary that price will go from this zone only, right? It can go deeper into your zone and then may react, or either it could totally, it can totally break your zone without even respecting it. Okay, so it depends on your direction, storyline, your entries and confirmation. So we will go into that on the later part, but your basics has to be very strong, right? Again, we had EG buy, and it took 3 bullish candlesticks to take out this high. So, and this base was responsible for it, and we can clearly see how beautifully price has rejected from there, right? Even though it has wicked deeper into the zone, but we failed to close below this dominant area, so it is still considered to be the one that has rejected the price. Okay, same thing over here. This is a bearish engulfing sell, and two bearish candlestick was responsible for the break, so it is a blind engulfing sell. Okay, I guess those are enough examples. Let's go into the another type, which is perfect engulfing pattern. So for a perfect engulfing pattern, the rule has to be that the low of this bearish if we look at the example of bullish perfect engulfing pattern, the low of bearish candlestick has to be engulfed, as well as the high of the bearish candlestick has to be engulfed with the body closer. So the low has to be engulfed with the wick, and the high has to be engulfed with the body closer. That makes it a perfect engulfing pattern. Okay, so when we look at the OHLC perspective of this candlestick, we can see that it usually forms up a left shoulder or a Quasimodo level and the apex, and this was the break, right? So your perfect engulfing pattern will usually form a QM pattern in the lower time frame. Okay, and if we look at the your bearish scenario, we just let me see. Yeah, so in the bearish case, the low of bullish let's say this is a bullish candle, the low of this bullish candlestick has to be engulfed with the body closer of a bearish candle, and the high has to be engulfed as well. So that makes it a bearish perfect engulfing pattern. Okay, and that will form up Quasimodo pattern in the lower time frame. Let's look at the example on the live market. Okay, I have a very beautiful example on over here. So over here I can see this engulfing cell, which is a perfect engulfing cell, right? So perfect engulfing cell or a Quasimodo engulfing cell. And if we look into the lower time frame, the daily time frame, we can clearly see that on the lower time frame we formed up a Quasimodo pattern, correct? So this is why we call a perfect engulfing cell or a buy as Quasimodo engulfing cell, okay, or a buy. And generally we anticipate that we will be going lower from here, right? But market did not respected our sell zone and eventually broke it, which is fine. Once it broke it, we have levels to be looked at. There is this left shoulder from where we can anticipate from the buy movement, and also this dominant area over here was responsible for the breakout of this major resistance, right? So this becomes a very strong area to look for entries, right? And this is where exactly price reacted and gave you a very beautiful bull run, correct? We will go into these sort of concepts on the later part, but for now your understanding has to be very strong about types of engulfing. Actually, once you understand the types, you don't even have to memorize. You will be basically considering every engulfing pattern as your classic engulfing pattern, but for the understanding you should be practicing it for now. Okay, now getting into the next type, which is gap engulfing. You won't see this happening in your forex market. Usually it will happen in your stock market where big gaps happens, right? Or in your future markets. So in this example over here, if I look at this, is bearish candlestick and the high is being engulfed with the body closer. But if you look at the OHLZ perspective, this was the open, this was the high, this was the low, and this was the close. Right? So this is the closing of price, and then this is the opening of the next candle. So there is a gap in between that, right? And there is this EG buy. So whenever there is a gap in between the opening and the closing, so that is what we call it as a gap engulfing pattern. Okay, same thing over here. Let's see that. Okay, not really the perfect example, but you can see this is a EG buy and there was this gap inside it, right, which later got filled. So this tends to be called as gap engulfing buy or a sell. Okay, I can go into more examples. Let's see that on the live chart. If I look at the Apple chart over here on the daily time frame, yeah, this is a perfect example of gap EG buy. So this is where the closing was for this candle, and the next candle opened above this previous candlestick closing and formed up a EG buy. So this is your gap engulfing buy, correct? So yeah, we can look at few more examples. With this is a engulfing sell over here, because this is where we closed and this is where we opened. So this is a gap engulfing sell. Okay, not really needed in your commodities, CFD charts basically. So going back to the topic again, now there is a same color engulfing pattern. You can either call it as a same color engulfing pattern, or some traders may call it as dominant areas as well. It is up to you, but the logic or understanding is similar. Okay, what is the logic? The logic is that if we look at the OHLZ perspective of this bearish same color engulfing pattern, this is where we have opened, this is where we made a high, and this is where we closed, right? And then we made a new open, we made a new high, and this is where we closed. Can you see this is a same pattern we seen in the perfect engulfing sell example, right? Or you can say this is a Quasimodo engulfing pattern. So your same color engulfing pattern are basically similar to your perfect engulfing pattern or your Quasimodo engulfing pattern. Okay, you can even call it as dominant areas. So the understanding is similar. You can call it whatever you wanna call, right? So moving ahead on the next example for bullish case, what we can see is this low of bullish candlestick was also being engulfed and the high was also being engulfed. So it will form a same QM pattern for the buy. So this is what we call as same color engulfing pattern. Let's look at few examples. If I go back to the gold chart again, okay, let me try to look for a few examples. can't really find one. So yeah, over here. So the the high is being engulfed and the low is also being engulfed with the body closer. So this is an example of your perfect engulfing cell. Even though we had a classic one just right above it, but this is also engulfing cell you could mark. Okay, let's look at few more examples. They don't occur frequently. Okay, let's see over here. So this high of the candlestick, high of this bearish candlestick is being engulfed with the wick, and the low is being also engulfed with the body closer. So this is your same colors EG cell. Okay, let me see some perfect example. Okay, this is a perfect example of same color engulfing pattern. So this, the high is being engulfed with the wick and the low is being engulfed with the body closer. So this is a EG cell from where you could expect market to go lower. Okay, let's look for some Y examples. Okay, something over here. This is not a same color EG buy. This is not a EG pattern. Okay, why is that? Because this is a inner bar pattern. So this is the mother candlestick, and this candlestick high and low was inside this previous candlestick low and high. So this is considered to be an inner bar base. Okay, you can mark this as a base for expecting a bullish movement, but you can't consider this as EG buy or a sell. Okay, okay, I can see this example over here, a perfect same color engulfing buy pattern. So the low of this candlestick, this bullish candlestick, is being engulfed and the high is also being engulfed. If so, this is where we can anticipate for bullish movement. Okay, and I can see a clear example over here for bearish same color engulfing pattern. The high is being engulfed with the wick and the low is being engulfed with the body closer. Okay, so these are few examples of it, and I guess you guys would have understood. So this is all for today video. Let's target for 100 likes and 120 subs, and I will upload the next video. That's all for today. Have a great day, guys.